Good afternoon and welcome to Bull Market Stock Show. This is your host, Jeromes, and I do apologize for starting it actually at 1:30. We just have some actual load shedding problems at 1 o'clock, and then the internet is slow, and then we have all sorts of problems afterwards. That's why I started at 1:30, but I will move back to 1 o'clock as long as this whole thing is just the load shedding story is just stopping. But yesterday it was actually the FOMC meeting, and there was a lot of crazy reactions. One, the dollar went down, and then today when I woke up, the dollar actually went up. It's totally insane that is currently going on. We all know now that the Federal Reserve did start tapering, and they're starting with actually $15, sorry, not $15, 15 billion US dollars, where they're actually going to scale down, and that will continue now every single month, and that will persist until next year. As I can calculate, as I calculated, will go on until next year, August. So that is now if the economy is actually moving in the right direction, and then the Federal Reserve will keep that pace of 15 billion US dollars per month. Now, as I said yesterday, that story was already been priced in, and the dollar actually went down. Now, funny enough, when I woke up this morning, the dollar actually went up. Now, you have to ask yourself, will this actually work out? Like, will the dollar actually move further up? Will we just saw maybe a bluff where it will go up and then it will go further down? That is now the big question where it goes in. But I think personally, this is one hell of a policy mistake. Because look, you have also the problem, even Jerome Powell was actually also talking about it, where actually Michael McKee of Bloomberg was actually asking the question, will the story actually work out where they just delay everything and then things will get so heated up, then they have to actually start to tighten up very quickly by lifting up the interest rates very sharply, and that could cause actually a recession. I actually downloaded a clip yesterday just to show you the question, what Michael McKee was actually making yesterday.
Thank you. We'll go to Mike McKee at Bloomberg.
Mr. Chairman, the critics of your patience policy argue that given the long and variable lags with which monetary policy works, that you are likely to end up, given inflation, by having to raise rates faster and farther than you would have liked, and therefore send the economy into recession. Given the fact that basically your forecast has been chasing inflation over the last year, and now you're talking about it not coming down till the second or third quarter, why would they be wrong in thinking that?
That question for me was actually the highlight. And then he totally messed up the whole entire answer. Because he was saying, listen here, if interest rates are getting a bit heated up and it's really getting hot, the economy, which has already been hot, the economy will go into recession because then he have to lift up interest rates even further. Now, this is actually the whole thing. If you look at the policies actually of the Federal Reserve, or I would say actually the economy of the United States, its supply chain chaos is already hitting global growth, and it's about to get worse. And then the supply chain stories is actually all over. There will be things that people can't get at Christmas. White House warned. That was actually, this article was, I think, on the 15th of October, if I can remember. Then it goes further on inside the supply chain crisis, how it took months to get electronics from China to the United States, and it goes on and on and on. This is not a normal inflation story where actually employment actually increases and then you get inflation and then you can lift up interest rates. That is what we call the Phillips curve in economics. That is what normally happens. This is all to do with aggressive spending and actually causes the Federal Reserve actually now, without a choice, Federal Reserve is supposed to lift up the interest rates to get a bit of the economy to slow down. Because if you have policies so loosen up, it means that people will just keep on spending and spending and spending, and you will just add more supply problems and more supply problems. Now, this is actually what Jerome Powell answered yesterday.
Well, so let me say what's happened, and we're very, very straightforward about it, is that inflation has come in higher than expected. And bottlenecks have been more persistent and more prevalent. We see that just like everybody else does. And we see that they're now on track to persist well into next year. That was not expected not expected by us, not expected by other macro forecasters. Now, let me say, it's difficult enough to just forecast the economy in normal times. When you're talking about, global supply chains in turmoil, it's a whole different thing. And you're talking about a pandemic that's holding people out of the labor force for reasons that we can sample, but we don't have a lot of experience with this. So it's very, very difficult to forecast and not easy to set policy. So we have to set policy, though.
That guy totally messed up that question. He actually said that basically what he said, he don't know what the hell he's doing. He's just setting up policy because there's things that are happening that nobody actually thought or nobody forecast. That is supply chain problems. When you have these such of problems with supply chain issues, bottlenecks that is running, which has nothing to do with the normal economy, where jobs get created and then they can sort out these things. Normally, when jobs get created, then normally that's a sign of a strong economy. It all depends basically on tomorrow. Is the jobs actually really coming onto stream? Because you need a whole bunch of jobs and technology and capital spending to slow down to bring down this whole entire bottlenecks. But that is not the bloody case because the whole economy is literally choked. So the best thing for you to do, rather, is to lift up the interest rates so that people can spend less, and that will actually put less pressure on the bottlenecks. That is actually the most logical point or the logical policy that they can do, what they can choose. But what they do is keep the policy loosened. I'm sorry, the 15 billion tapering that started yesterday, that is absolutely a joke. That's nothing. They were supposed to actually stop QE entirely yesterday and talk about lifting up interest rates. When that question came, he did not talk about it. He actually diverted the whole thing away. So he don't want to talk about basically about interest rates or lifting up interest rates. But the 15 billion US dollars is not good enough. That I can tell you now. That is not good enough. They need to do more. So what is the whole take with the dollar? That is the whole thing, because it's easy for me to trade. Once I look at the dollar, then I know actually how the market will react. And if we look actually at the United States dollar now currently, this for me, I know today it actually pushed up a bit. If you look at the one-day chart, it pushed a bit up. I was totally surprised by it. But this is the one-day chart, and you can see actually it's sitting. I think it's going to idle here for today. And then it comes to the non-farmers payrolls tomorrow. That is actually what I think what's going to happen. It's going to idle here today, maybe move around, and then the whole thing about the non-farmers payrolls will come in tomorrow, and that is going to put pressure or upward on the United States dollar or downward. But as things stands with the whole passport story of the United States, I am not so optimistic about the job numbers about tomorrow, because if you hear the stories there, it looks like there's a lot of people who are just leaving their jobs because of the passport. So non-farmers payrolls will be very vital tomorrow. If that number come out bad, then it means the Federal Reserve can't actually move a policy so quickly or start to taper or to close down tapering, basically, if the job numbers are not good. They're just going to slow down with tapering. Maybe. I'm not sure. But it depends actually on the job numbers tomorrow, because if that one comes out bad tomorrow as well, last month was already terrible, then I think the Federal Reserve will sit with one hell of a big problem. But I think personally, this is one hell of a policy mistake of what they did yesterday. I think they just needed to start taper aggressively, stop this whole entire QE program, and start to lift up interest rates, because everybody's screaming about bottlenecks, everybody's screaming about inflation, and the Federal Reserve is just keep on going with the same nonsense that inflation is transitory. For me, I think the dollar will actually go down. I think that is a good resistance line there, and I think the dollar will just go down. I don't expect any good news for the non-farmers payrolls tomorrow, and that could actually push the dollar a bit down. So for me personally, I'm sitting on the fence for today and for tomorrow, and I will see what is the non-farmers payrolls news tomorrow, and then I will make my decision. So that is it from my side for today. I will see you guys tomorrow, hopefully at 1 o'clock. Hopefully that load shedding will be okay. But please don't forget to subscribe to my YouTube page And please leave your questions also, and then I can answer them tomorrow. Bye-bye.